Now we're going to learn about calculating deductions for Social Security and Medicare and withholding them through the payroll process. But first, let's talk about FICA. So FICA, which stands for Federal Insurance Contributions Act, is a 1935 federal law that created, amongst other things, two taxes. It created old age survivors and disability insurance, also called OASDI. This is actually Social Security. And it created Medicare, which is hospital insurance. This chapter will sometimes abbreviate that as HI. So you need to know these two taxes by their different names. OASDI is also known as Social Security. Medicare is sometimes abbreviated as HI, high, for hospital insurance. Now, Social Security, which we'll learn about a little more, is designed to supplement income in old age. It should not be the only source of retirement income. It was never meant to be the sole source of retirement income. It's just a supplement. And Medicare is designed to cover some hospitalization expenses one may occur in old age. It will likely not cover all hospitalization expenses. So again, just a supplement. So employers are required to withhold amounts from the employee's pay each pay period, and then later the employer would give this money to the government, which we'll learn about more in the next chapter. So let's talk about OASDI more. So remember, OASDI stands for Old Age Survivors and Disability Insurance, but we will always call it either OASDI or Social Security. So one of the things that it's for retirement for people over 62 years of age. Now, currently 62 years of age is the earliest you can start taking Social Security. You get to choose when you take it. 62 is the earliest, but the later you wait, the higher your monthly payments. It also provides benefits for disabled people. And lastly, it provides benefits for families of deceased workers who were covered by this law. Medicare, on the other hand, is hospital insurance. It provides medical benefits for people over age 65. So now we're going to talk about how we calculate these two taxes. So we'll start with a more complicated one, OASDI, also known as Social Security. Now there is a maximum. In other words, there's a limit on the amount of tax an employee must pay. The maximum dollar amount of earnings that can be taxed is called a wage base. Now we will be using this term wage base quite a lot in this chapter, so you need to know what it means. That's the maximum dollar amount of earnings that can be taxed. Okay, it's not the maximum tax, it's the maximum amount of wages that can be taxed in a year. And we'll get practice with this. Currently, for Social Security, the tax rate is 6.2%, but only on the first $127,200 of wages per person per calendar year. So what this means is the maximum Social Security that you can withhold per employee is 6.2% of $127,200. Now we will assume that the wage base for OASDI, Social Security, is $127,200. In reality, it often changes each year, but there's no need to memorize it. In the real world, you just look it up, and on our homework, this number, $127,200, will be given to you. You also don't need to memorize the 6.2% rate, but we will use the 6.2% so often that you will memorize it. So I want you right now to go ahead and calculate the maximum amount of OASDI tax that one employee can pay in a calendar year. So let's say I make $2 million a year. How much are you going to tax me for Social Security in that year? Well, it's 6.2% of the maximum that you can tax, which is $127,200. So if you calculate that, $127,200 times 6.2%, is $7,886.40 of OASDI tax, in other words, Social Security tax, in a calendar year. That's the maximum that you can withhold from an employee per year. So in other words, someone who's making $128,000 pays the same amount of Social Security tax that someone who makes $2 billion in a year. So it is kind of odd that this tax stops taxing at the higher rates. So there's two methods to calculate the employee's amount of gross pay taxable for OASDI. Now usually this taxing OASDI is really easy. Like let's say it's the first paycheck of the year and someone makes $10,000 on the paycheck. You're just going to calculate 10,000 times 6.2%, and that is their tax. But you got to make sure when you're working in payroll that you don't tax them more than the maximum. So there's two methods to do this. Most students will use this first method 1 that we will go over. And the second method 2 is more like a computer flowchart. And if you decide to ever do any of these calculations in Excel, you might want to use that method. But let's do method 1 using the handwritten graph because it's more intuitive. So we're going to use a graph to calculate how much of an employee's gross pay is taxable for Social Security. Now this will make more sense once we go over it. So we have Sophia as the employee, and she gets paid a lot. And we're only going to do 3 paychecks here because she gets paid a lot. So the vertical axis is her cumulative gross pay. And so do you remember the maximum that we can tax someone? What's the maximum, or what's the OASDI wage base? Do you remember that number? It's $127,200. So what that means is we will tax her 6.2% for OASDI, also known as Social Security, as long as her cumulative wages for the year are below $127,200. So what amount is taxable for each employee? Gross pay under $127,200 or above $127,200? Well, we just went over this. The taxable amount is the amount under $127,200. Once she makes more than $127,200 in a calendar year, then we can no longer tax her for Social Security. So let's do her first paycheck. So I told you she gets paid a lot. So she gets $60,000 on her first paycheck. So what's the taxable amount? Now we're not calculating the tax yet. What's the taxable amount for OASDI, also known as Social Security, in paycheck 1? Well, the taxable amount is the amount below $127,200. So the taxable amount for this paycheck is all of it, $60,000. So how much are you going to tax her for Social Security on that first paycheck? Well, you're going to take the taxable amount, $60,000, times 6.2% equals $3,720. So from her $60,000 paycheck, we will withhold $3,720 for Social Security. Okay, next paycheck. It is also $60,000. So of paycheck 2, how much of the $60,000 is taxable for Social Security? Well, it's the amount that's taxable is the amount that is under the $127,200. And all of it is under the $127,200 wage base. So all of the $60,000 in paycheck 2 is taxable for OASDI. So how much are you going to tax her for paycheck 2 for Social Security? Same as the first check. $60,000, the taxable amount, times 6.2% gives us a Social Security tax of $3,720. All right, so now the third paycheck is where it gets a little bit more complicated. So what is the taxable amount for OASDI in paycheck 3? Again, is it the amount under the purple line or the amount over the purple line? It's the amount of the paycheck that is under the purple line. The taxable amount is gross pay below $127,200. So to calculate the taxable amount, you have to figure out how much of that third paycheck is under the $127,200 wage base. To do that, you take the wage base, $127,200, minus $120,000, which is her year-to-date gross pay. So there's that YTD, means year-to-date gross pay. So the taxable amount for her paycheck 3 for Social Security is only $7,200. Remember, it's the amount under the line from the last paycheck, paycheck 2, which is $120,000 year-to-date, up to the $127,200 line. So the OASDI tax is that taxable amount, $7,200, times 6.2%. When you do that, it's $446.40 of OASDI tax, also known as Social Security. So this concept is probably the most complicated part of this chapter. So make sure you review this video so you understand how to calculate OASDI tax. Now, method 2 is another way to calculate the same amounts. And to be honest with you, most students don't use this. This is, like I said before, this is probably going to be best to use if you decide to do some type of a formula in Excel to calculate the taxable amount. So if you want to skip this method 2 and just use method 1, feel free, but I'll go ahead and do this. So in the first box it says to start you need year-to-date YTD gross pay for the employee prior to this pay period. You need the gross pay for this paycheck and you need the Social Security wage base. So let's do the first paycheck for Sophia. So we're going to go through those first 3 paychecks again. So according to the yellow box, her year-to-date gross pay is $0. Her paycheck or her gross pay for paycheck 1 is $60,000, and of course the OASDI wage base is $127,200. So we look at this first question. Is the employee's year-to-date gross pay prior to this pay period greater than the wage base? Well, her year-to-date gross pay is 0, and the OASDI wage base is $127,200. So no, it is not greater than the wage base. So we go down here. Is year-to-date gross pay 0 plus this pay period's gross pay less than or equal to the wage base? So gross pay year-to-date is 0 plus this pay period's gross pay is $60,000. Is $60,000 less than the wage base of $127,200? Yes. So then we go over here. All of the employees' gross pay for this paycheck is taxable for OASDI. So $60,000 is taxable for OASDI for her first paycheck. Let's do her second paycheck now, using the same flowchart. So Sophia's year-to-date gross pay is the $60,000 from the previous paycheck, the first paycheck. Her second paycheck is also $60,000, and the wage base still is $127,200. So we look at the first question: is the employee's year-to-date gross pay $60,000 prior to this pay period greater than the wage base? No. So we go down here. So is year-to-date gross pay $60,000 plus this pay period's gross pay $60,000? So that's $120,000. Is that less than the OASDI wage base? Yes. So we go over here. All of the employees' gross pay for this paycheck is taxable for OASDI. So for the second paycheck, $60,000 is taxable for OASDI. Then we get to the third paycheck, which is the tricky paycheck. So in the third paycheck, her year-to-date gross pay is $120,000, because remember, she's had 2 paychecks prior to this worth $60,000 each. So year-to-date gross pay is $120,000. Number 2, Sophia's gross pay for paycheck 3 is $60,000. And then OASDI wage base is still the same. So let's look at the first question. Is the employee's year-to-date gross pay, $120,000, greater than the wage base of $127,200? No, it's not greater. So we go down below. The question on the bottom is year-to-date gross pay, $120,000, plus this pay period's gross pay, $60,000. So is basically is $180,000 less than the OASDI wage base? No, it's not less than. It's actually greater than. So we go over here. So the employee's taxable amount for OASDI is the OASDI wage base, $127,200, minus the year-to-date gross pay, which is $120,000. So what's $127,200 minus $120,000? It's $7,200 is taxable for OASDI for this paycheck. So again, it's this third paycheck in this scenario. That's the tricky one. And then let's do another example. Let's do her fourth paycheck. So Sophia's year-to-date gross pay is $180,000. So she's had 3 paychecks prior worth $60,000 each. So her year-to-date paycheck prior to this is $180,000. This paycheck is again $60,000, and the wage base has not changed. So the first question is employee's year-to-date gross pay prior to this pay period, in other words, $180,000, is it greater than the OASDI wage base? Yes. So we go over here, and then it says none of the employee's gross pay is taxable for OASDI this pay period. That makes sense. She's already maxed out her Social Security. So 0 is the amount of taxable for this paycheck. So again, use method 1 or method 2, whichever way you prefer. And finally, we'll talk about Medicare. We'll talk about how to calculate Medicare. This is not a tax class. This is just a payroll class, introductory payroll class. So we're trying to keep this relatively simple. So in this class, we will assume that all wages are subject to Medicare tax. There is no wage base, which means there's no maximum. So what this means is Medicare will be much easier for you to calculate compared to Social Security, because you don't have to worry about a maximum. Now in the real world, there are some things that are not taxable for Medicare. But again, we're trying to keep this class simple. It's not a tax class. This is right now we're just trying to learn about payroll. So what's the tax rate for Medicare? It's 1.45%. Now at this time, there's an additional Medicare tax of 0.9% in excess of $200,000 per employee per calendar year. And this is paid by the employee, not the employer at this time. So basically this is saying if you get paid a lot, you're going to pay 0.9% extra in Medicare. Now for this class's purposes, you can just ignore this additional Medicare tax. So for this class, Medicare will be taxed at 1.45% on all wages.